Hey, welcome back to Freedom Algo. So I'm doing something a little different. I'm actually just taking a walk right now, and I wanted to talk to everybody about a concept called trading psychology. Now, not just as a general topic, but specifically, I want to talk about conditions that lead people into revenge trading. So we all know, maybe you don't, but whatever. Revenge trading is a concept in trading where you take a trade and you have a loss, and then you feel like you want to get revenge on the market. And so, what that means is that you decide that you're going to try to win all that money back and you trade recklessly to do so. So, it basically becomes this thing where you start breaking your rules. There's a lot of things that could happen. You could either break your rules and start doing other things. You could chase a trade. You could go with too large of a size. You could double down and you end up losing more. But basically, it's you're taking revenge on the market. You're not thinking clearly. You're just trying to make that money back. And it can be a huge problem for a lot of traders. It's probably one of the biggest things that washes traders out. Maybe they take a $500 loss. And so then, instead of settling for their next trade, winning them $200, they think that, oh, I need to make $600. And then they get too greedy. And then it's just everything falls apart. Well, this doesn't just happen at random. It happens a lot of times when traders have had a string of bad trades or other issues, or if they're struggling with other things mentally. But one of the things in particular that can cause a lot of problems is something that actually happened this week, which is extreme volatility. So this week, we had extreme volatility in the market. And what that means is that the actual price was moving way higher and lower within the day than usual. So I trade the ES futures market. That's the S&P 500 futures market. Typically, when you trade the ES, if you look at the average true range of the last 21 candles when you're trading, and I trade the 2000 tick chart, a normal ATR would be something like 2 to 3 points. But like today when I got there this morning, the ATR was like 12 points. Now, that was in the pre-market. Even in the regular session, it was like a 7 or an 8. It was like 4 times higher than normal. And what that means is that the bars are like 4 to 5 times larger than normal. So when you take a trade, your possible win is large and your possible loss, but it's way different than what you're probably used to trading. And a lot of it, again, had to do with all that stuff with the tariffs and the market was freaking out. And this can happen from time to time. But the point is, when it's like that, traders aren't used to it. So let's say you've been trading and you have some wins, some losses, like you're used to, like, let's say you take a loss for $400, you take a win for $400, like you're used to like those kind of numbers. Then you come and trade a volatile day like this. But your strategy requires that you put your stop loss below the signal bar. If your signal bar is 4 times its size and you have not positioned yourself to take that trade, what's going to happen is you're going to go from having a $400 loss possibly on that trade to having something more like a $1,600 loss on that trade if you did not properly size down your contracts. And a lot of people don't. They don't size down. They don't check for volatility and go, okay, I've been trading with 4 contracts. Maybe I should trade with 1 today. So there's a lot of precautions that you need to take when the volatility changes, because the market changes over time. It changes character. It changes its flavor. It changes its style. That's just a normal thing that happens in trading. The market's not always going to be consistent. It's going to change. You're going to have times where it's slow and barely moving, and getting a 4-tick trade is amazing and takes 2 minutes. And then you're going to have times where 4 ticks happens in 1 second. So, when you're trading, you have to be aware of this possibility. You have to be aware that this kind of thing can happen over time. So I just wanted to say that you really, really need to understand that when you're trading in these conditions, and the market does this, one option is demo trade on a super high volatility day if you've never experienced it before. Another option is size way down. Another option is don't trade that day and just watch. Just see what happens. Because I got a lot of messages today from people who had a really just rough time. And I got messages yesterday for the same reason. People yesterday and today were just really struggling. And, I feel for everyone who had a hard time. So I just really wanted to make this video to tell everybody, like, you have to be careful when the volatility gets extremely high. And you also have to be careful with the way that the market can move. And just, you have to be aware of the fact that when you're trading this type of market, when you're trading it, if you take a loss, take the loss and just settle. Don't try to revenge trade, especially when the volatility is like more than 4 times what it normally is, because you are just going to you could blow up your account. Like, you're going to blow up your account and wash yourself out, and you're just going to end up in a rough patch. And also, it's a Friday. That's the last thing you want to do before a weekend. So I just figured some people probably needed to hear this today. So a little bit of a different style video. And anyway, I wanted to share this with you. Look, I've got a free mindset masterclass. It's available if you go into the description and you look at the school free membership. So school.com/freedomalgo-free. If you go to that URL, you'll see it in the description. You can get access to the free mindset masterclass. You can also take some of my price action course, and there's an entire trading psychology section, and I made a bunch of it free. So go check it out. It's really valuable, especially, in times like this when the market is super volatile, because this is the kind of market that can wash people out. So hope everybody has an awesome weekend, and I'll see you in the next video.